Hi guys, and welcome to this week's episode of Knowledge Finder EDU. Today we have another pair of special guests in the house, Zahir and Kola, founders of Sublime Trading, an online learning platform where you can actually subscribe, take a course, learn how to trade, and join a trading community with some great teachers and mentors and peers. So welcome guys.
Thank you. Thanks. Glad to be here.
Thank you.
Yeah, looking forward to this.
Thank you.
Yeah.
Just a quick introduction. I actually met Zahir through a friend of mine in the gym and actually enrolled on the Sublime Trading course, joined the community. It was great. I learned a lot of the basics and helped me further my learning how to learn when it comes to trading, investing, etc. So if you could explain to everyone, what is Sublime Trading? How did it start? Where did it all come from?
Yeah, good question. So Sublime Trading is a community where we mentor professionals and business owners to build investment portfolios around their busy lifestyles. Now, we know, as you've said, financial literacy in adults isn't great. So we're on a mission at Sublime Trading. Our mission is to lead the revolution in simplifying financial literacy for adults so that they are confident in reaching their desired wealth target before retirement. And they'll be doing this using a repeatable system that we train our community members in.
I'm with you. So how did it all start then? How did you start learning about financial literacy and yourself, Colin?
So before I even thought about investing, I was at university studying media production. I had this idea to go into the world and just find a job and work the 9 to 5. I was very excited about that. But then luckily I found a sales job, and my mentor in that sales job introduced me to a book called Rich Dad, Poor Dad. Yeah. So it was after that really changed my whole perspective of how to interact with money and how important what it is to actually have financial literacy. So then I began my journey to create wealth. So I had to decide how I was going to create that. So I did a quick search online and I found out that you can only create wealth through real estate. Well, there's many avenues, but real estate, starting your own business, or investing. And real estate and starting your own business involved working with people, and I wanted to rely on myself. So then I just chose investing. And the journey just began from there. There's a lot more to the story, but I'll leave to add a few.
Yeah, I mean, I think Colin hit the nail on the head there. I mean, yeah, went to university, got a degree in software engineering. And I think what I learned most about at university is that when you go down the route of the 9 to 5, you've really got to try and enjoy what you're doing. Because 9 to 5 is the bulk of your life. You're giving away your life to a job, effectively. Yeah. And, I've got a degree in software engineering. So when I started working, I was like, this isn't for me. What am I doing? And I realized that really quickly. I don't think a lot of people have that realization. Or maybe they do, and they're just not brave enough to break away, for maybe parental expectations, cultural expectations, all of that. Yeah. But I broke away. I in my first year, I was working for Oracle in Reading as a software engineer. Quit, did a TEFL, teaching English as a foreign language. Went to live in Taiwan, teaching English for a year. Japan, Philippines. I was out there having a great time. But again, I was out there having a really good time, but there's no money in it, so you've got to find this balance. So I came back to London and I then ended up in photography, which was always my passion. Working with a great collective, a couple of guys, very talented individuals. We were in advertising photography, and that's really where the money is. So when you've got your images on the side of buses, for example, there's usage rights. And so we were making really, really good money, saving good money. And I wanted to do something with my money. Now, if you listen to your sort of family expectations, it's always about buying a house, putting that money into a deposit. But, I wanted growth. Mm-hmm. And so I went down the route of learning to invest. I read books as well. I to be honest with you, I've never read Rich Dad, Poor Dad, to be honest with you. But I've read books like Way of the Turtle by Curtis Faith, How I Made $2 million in the Stock Market. I know we're going to talk about these books later on, but these books were really eye-opening for me because it showed us how we can make money investing in the stock market. And like Colin said, that involves you and the market and having the right amount of money. It doesn't involve other people. And that's what I found really, really interesting. It's something that I could do around my careers at the time, which was photography and teaching English. So that's how I got into it.
Yeah, and when I I was actually introduced to investing through a friend. After university, he invited me to a intensive weekender. He said, come along, I've got tickets to the course. And we just left university. He said, tickets cost $2,000. I don't have money to pay you right now. He said, if you're not going to come, I'm going to invite someone else. So I just had to go because it was a no-brainer. So I went there. I literally was expecting to learn how to read ticker symbols. Have you seen the Bloomberg channel where you have all the tickers at the bottom? I thought I was going to learn how to read that. I had no idea what investing was about. So when we went there, they showed us all these charts. I was just blown away because I didn't expect that. And it was very confusing. It was an intensive weekender. But I left that course and I went away. A few weeks later, I just picked up the books they gave me and things just started to make sense. I said, you know what, I can really do this. This makes sense now. But it took time for it to sink in. But when it did, I said, you know what, I really want to learn how to invest long term.
So how long would you say the whole education process was?
Me, when I want to learn something, I drink the information. So one mentor that taught me how to invest, I went through the course in a matter of 2 weeks, where some people took 6 months or a year. I went through it 2 weeks. But I'll say if you have a good course, you can get through it.
In hours.
Yeah. As quick as you want to.
Yeah. I mean, just to build on what Colin's saying, there's an expression which is investing is simple but not easy. You may have heard trading is simple but not easy. Whether you're a trader or an investor, it doesn't really matter. The principles are the same. What you're trying to do is make money from the financial markets, right? So I like to say investing is simple but not easy, just because trading has a bad reputation, which we'll talk about as we progress. But the best techniques, this is what's so fascinating about this industry, is that the best techniques are extremely simple to learn. It's just that because it's so simple that people tend to overlook the simplicity of it, because the brain craves complexity. The more we understand something that's complex, the more intelligent we feel. And we don't, with that logic, you cannot bring to the financial markets. It's the less you do, the more you make. So the simplicity of it is actually mind-blowing. But executing a system day in, day out, week in, week out, year in, year out, to grow an account consistent, that's where the challenges lie. Yeah. But learning this stuff is very, very, as Colin's mentioned, like once you start looking at charts, everything changes. We've got this idea that you've got to understand the company, you've got to look at the books, you've got to look at the figures, what products are coming out, what the CEO is doing. It's none of that. We are everyday people. There's an approach for us that's very unique. And then there's the approach for the institutions. Two different worlds. When you understand what's right for us as busy everyday people, everything changes.
Oh, really? No, that's some great information. So when you were starting out then, you must have been in a state where you've taken these courses, you haven't got a great amount of cash. When did you just dive in and get involved? Did you do the full education process, complete all the courses, and then get involved? How did you structure your initial investments and dip your toes into the water?
Yeah, it's a great question.
I was kind of all over the place at first because I went to a few different courses. I tried to find as much free information as I possibly could, but I drank the information and it was really, really confusing. But what made sense to me later on down the line was the most simple approach, which is just to follow the trend. Yeah. If you've ever studied investing or any sort of courses, how to follow the trend, just aim to invest long term, and it's a no-brainer, really.
Yeah. I think what the challenge is finding the right information. Mm-hmm. So when we started, I started 2006, 2007. I think you were around the same time, right?
Probably a year after, yeah.
Yeah, so we kind of started around the same time. I mean, we've been in this industry for a while. So in the early days, in our early days, finding that information is a challenge because the internet is full of a lot of inaccurate, misleading information, a lot of unqualified educators. And that's only got worse over the years. I mean, we started 2005, 2006, 2007. We're now in 2021. I mean, you go online, it's just horrendous trying to find the right information. Yeah. So that was the challenges. And, we, like everyone does, we bought into get-rich-quick schemes thinking that this was the answer. And then, you realize you've been had. Once you've done the course, you've walked away with nothing. They try and upsell you another course. You're like, what's going on here? Yeah. But you got to persist. You got to be accountable for your choices. And I think this is something that often people fail to appreciate, is that if you buy into something that doesn't work out, you bought into that. You've got to take accountability for your choices and go, right, that didn't work. Just because that didn't work doesn't mean that the industry as a whole doesn't work. Yeah. I've just got to find the right information. Mm-hmm. And so we persisted, and we found other credible mentors who eventually showed us the right path. I connected with Collar through one of the courses, and Collar had learnt a lot, I had learnt a lot, and by combining our personal journeys together and filtering out what didn't work and putting together what did work, and then again being accountable to each other with the investment decisions that we were making, we did this for a good 4, 5, 6 years, did really well, and through the back of that, that's how Sublime Trading came about. So, to answer your question, it's not easy to find the right information, but that's exactly why we create Sublime Trading. It's here to help people on their personal journeys.
With you. So how do people differentiate then? So even yourselves, you said trading's got a bad reputation and there's lots of noise on the internet. So why did you say trading's got a bad reputation, and how does Sublime differentiate between everybody else that's out there?
I'll say it's got a bad reputation because everyone's following the same formula. You're invited to a free 2-hour seminar, and then you go there, you thinking you're going to learn all the information you can. Then they invite you to pay 2 to 5 grand for an intensive weekend, which is what I went to initially. Yeah. And when you're there, they then tell you, in order to learn more and how to make money, you got to pay £25,000. We're going to throw in a free laptop. So, you kind of see the formula. They repeat themselves over and over again. The ones what you need to watch out for are the mentors with a good track record, and just hear what their community is saying. Reach out to them, see. Also, follow what they're doing as well. Follow them for a while. Look at their analysis. See how their investments are progressing, and from there you can make a decision.
Much more informed decision. Yeah, I totally agree with you. Look for results. We're in a space that's highly unregulated. Yeah. So anyone can set themselves up as an expert. Sell a course, £100 a month or whatever it is. If that person has 100 people paying him £100 a month, he's making okay money, right? You can niche yourself in today's world and get away with it. So I would say, don't be an autopilot. Get off autopilot. Don't think just because someone has Forex in their bio that everyone's a scammer. Look at what these people are doing. Understand their processes. Ask the right questions. So one of the questions I would always ask is, show me what you've achieved. You claim to be a good educator. Show me. Show me the results that you have achieved on a live account over at least 1 to 2 years. Yeah. If you've been around for 5 years, you can show me that. And if people can't show you that, then you've got to take what they're saying with a pinch of salt. Look at their Trustpilot. We've got a Trustpilot. We've got verified results, reviews on our Trustpilot. Take your time with it. Don't rush. The marketing, I know, like as I said, we fell for the marketing in the early days, but you've got to wise up to that. Marketing is powerful, but only if you allow it to be. Be smart with your decisions. Be accountable.
With you. Great. So if we go back to your early journey, if you had a job paying, say, if you had a job paying, say, 100K, you didn't have any investments, you've taken these courses, and now you want to become an investor, what would you do today in 2021? How would you approach the market, investing, etc.?
Me personally, I would save up as much of that money as possible. I would live on the bare minimum. So maybe spend or live on 25% of that money. So 75K, I've got to start investing. You're saying if they've already had the education, right?
Yeah. So they've taken a course, they've got a decent high-paying job, but they have zero investments at the moment.
Yeah, so definitely if you can save 75% of that money and invest that over a 5-year period, and let's say you make on a good course 20% a year and compound that interest, compound that profit.
Yeah.
In 5 years, you're gonna have a good amount of money to live on.
Yeah, exactly. From what I've learned and what we've learned over the years, you've got to save. It starts with saving. Like, people do not save. People have a spending problem. They don't have a money problem. Now, of course, there is a population in the UK that does live in poverty. Yeah. And, it's very difficult for them. And I understand that. And we're not talking about people who are unfortunately in that category, which is a real shame that people in today's day and age do live in poverty. But, it is a reality. We're not talking about those people. We're talking about people who've got money, but they don't know how to save. If you've got nothing to save, what are you going to invest? So you've got to work out a budget. You've got £100,000, work out a budget. What is the most I can save with this and still have a good life? You still want to go out with your friends and go out and enjoy life. Else, what's the point? But you've still got to save as much as you can. The more you save, the more you can invest. The more you can invest, the richer you will be over the next 5 to 10 years. Now, this is the thing. We live here in the UK. And in the UK, we have excellent opportunities that the rest of the world don't have. We've got investment vehicles available to us today that are free of capital gains tax. So if you invest as much money as possible, do this for the next 5 to 10 years, you'll make a huge amount of money, life-changing amounts of money, all free of capital gains tax. So that's what I would do. That's what we would do. That's exactly what, and that's what we advise our members. We have people from all ages, from all spectrum. The very minimum our members have is £10,000 to £20,000. That's what you need to get started. If you're less than that, your focus should be on saving. But £10,000 to £20,000 is the very minimum you need. And then we show them the processes. So, yeah.
So if you have less than 10 to 20,000, a lot of people, even when I was younger, I fell victim to this. You'll save up, I don't know, 5 grand, 6 grand.
Yeah.
It's sitting in the bank. That is your investment savings. But then, I don't know, something happens, an event, etc. You end up dipping into that 5K and never reach your target.
Yeah.
What would be your advice then?
I mean, what is the situation?
Maybe what I'm trying to say is there a way you could invest, for example, I don't know, 5 grand or 2 grand? Is there a safe place to put your money in terms of an investment if it's even just very minimal?
It depends what your goals are. If you want a very minimal investment, then maybe a stocks and shares ISA.
Yeah. Great place to get started. You've got, ISAs, for example, tracker funds. There's various ways you can do this, right? You've got the simple way, which is just set and forget. Every month, direct debit, money goes out of your account into different funds. That's one way. And that's a great place to get started, as Colin's mentioned, particularly in your early days. But your goal should be to make as much money as possible through whatever career you've got going on. You've got to be making money. If you're in London and you're only earning £25,000 a year, you're not going to be able to save. It's going to be very, very difficult unless you're still living at home with the family, which again is fine. There's this kind of stigma. You shouldn't live with your family in your early days. If it's going to save you money, don't be in a rush to move out, right? So the real foundation is really getting your personal situation correct. I think what people tend to do is they don't like their personal situation. They got a little bit of money saved up. So they then turn to get rich quick schemes to try and get out of their situation. Yeah. We've all done that, right? We come out of uni, we're working, we're like, oh my God, I don't want to be doing this. I want out. Yeah. Look on the internet, end up in some pyramid scheme and you're done. That's 2 grand gone. So you're back to zero. You've got to start again. It's just a waste of time. And people need to learn it in their own way. But ultimately, find a job that pays you good money, that allows you to move up. If you can't, in that particular job, find a side hustle. Buy and sell on Amazon. Do something. Try and avoid getting into get-rich-quick schemes because every time you lose money, you'll go back to zero. So you're wasting time. You need to find ways of saving money. As soon as you've got £10,000 to £20,000, then it gets interesting. Because then you are in a position to start getting into investing in individual stocks, individual assets, taking advantage of spread betting accounts that are free of capital gains tax, where you need at least £10,000 to £20,000 to get started. There's ways. Just got to be smart. You've got to be patient. And if you're not in the right place, work on that to get to where you need to before you jump the gun.
Okay, so next I would like to ask you, what is your favorite asset class?
It's a good question. It's a good question. We get asked that quite regularly. I think the way to look at this is that the best asset class is the one that's paying you. So as an investor, don't come in with favorites. Like often you'll hear people say, I love crypto, I love Tesla, I love gold. What you're doing is you're bringing in an emotional attachment to something that has nothing in return for yourself. It's just an asset. So the correct answer to a question like this is whatever's paying you. Now, there are main asset classes that we look at, which is stocks, that's UK stocks, US stocks, commodities, currencies, also known as Forex. And then, of course, there's a new market called the crypto market, which is not a market you want to ignore. It's here to stay. It offers wonderful opportunities. So they're effectively our four main classes.
Yeah.
Our portfolio is predominantly stocks heavy because it's a very mature market. It's been around for a very, very long time, and it consistently offers amazing opportunities. Now, the key to a good portfolio is knowing what assets to have at any moment in time. Often you'll just see people holding on to Tesla forever, but that's not the way to do it. There's a time to have Tesla in your portfolio. There's a time to take profit and let go. And then there's time to replace Tesla with another asset that's performing better than Tesla. So the correct answer is forget brand names, forget having a favorite, have a process that helps you identify which are the best assets right now to have in your portfolio, because they're the ones that are going to give you money. So the answer is whatever's paying you. That's the best assets to have in your portfolio.
I was going to add, if you were to ask a question of which one market you would choose, I would say stocks. And the reason being is that if you look at Forex, the Forex market, when I first started investing, there was opportunities every year in Forex, but then that's changed now. It seems like the money's moved away from Forex. So very rare you find a good long-term opportunity. Commodities market, yes, there's opportunities, but as you've seen with gold has been moving sideways for a good number of years now. So not very hard to make money in gold. Cryptocurrency, very volatile. Yes, you can make money, but you lose a lot of money as well, especially if you don't know what you're doing. But with stocks, you have around 10,000 plus stocks to choose from. You've got UK stocks, you've got US stocks, you've got other European stocks, so many different stocks in the world, so many different opportunities. There's bound to be an opportunity every single year.
Yeah.
And with stocks, it's a lot simpler. They tend to trend for 12 to 18 months. So less work and better consistent returns.
Yeah, absolutely. I like to just add to that. What I like to tell people is that once in a lifetime opportunities happen several times a year. So just because you missed out on this stock during this boom, doesn't mean you're going to miss out on another stock, the following year. It's all about knowing what you're doing. It's an art at the end of the day.
I'm with you. No, great. So you mentioned the cryptocurrency market. What is your take on the cryptocurrency market? And you said it's here to stay. Why is that?
I mean, the future is blockchain in some ways. So you can't ignore what the technology it's built on. The world is evolving. The IDO market right now may be the future of what the stock market is today. You've got all of these very new projects that are coming up through the IDO, the launch pads that we have out there. It's a very interesting space, very, very interesting space. As an investor, as investors, we'd like to see what's going on out there. We're not closed-minded individuals. We're open. We know what works, particularly when it comes to stocks, etc. We know what works, but of course, we're open to learning. So, as Colin's touched upon, the downside to it is because it's so new, it's so volatile. So whatever money you put into crypto should really be a small percentage of your overall capital. A good investor spreads their capital, first of all. And secondly, a good investor always manages their downside. The profit is unknown. We're playing a game of probabilities, not certainties.
Yeah.
So you have to stack the odds in your favor, and you've got to understand how to manage risk. And the way to do that is understand markets, understand what's moving, and having good risk management principles in place. So, it's an interesting space. Just don't put all your eggs in one basket.
Okay. There you have it, guys. So online, you will soon have our courses on Knowledge Finder EDU. You can also go and check out Sublime Trading's courses to get further information and take more of a deeper dive into some of these subjects. So moving away from the crypto space, if you was just, let's say, starting out in your career, you've got the education, you've invested, would you stay in the stock market, or would you shift your money away to other industries, or do you keep all of your investments in stocks and cryptos, or what would you say about that?
I mean, I would definitely keep it investing. Like Zahir's touched on, there's different markets. So technically you are kind of spreading your money in different areas. So there's cryptos, a small percentage in cryptos, there's stocks, and there's Forex. If you want to, yes, you can dive into property, but you'll have to, I guess, go out there and learn exactly what you need to do to make money in property, and then, or start your own business.
I'm with you. Yeah. So when you guys got trading, got going, it was all going well. When did you decide to quit your jobs and just say, okay, now I'm an investor? And what was that like? How did that feel? Like, do you remember the day where you transitioned into that state?
Yeah, I mean, I do. It took me 4 years. It took me 4 years to get to a point where I could fund a lifestyle from my accounts without impacting the growth of the account. This is really, really important. You don't want to have, say, £20,000 in an account. You double that to £40,000. Then you take out the £20,000 and you're back to the beginning. What you want is a sustained period of time where you're consistently reinvesting profits back into your system, and then adding more money as well through your jobs and your careers. This is why you need to have a 5 to 10 year plan at the very minimum. Then you get to a point where your account size is large enough. Let's say, you've got $500,000 to $1 million growth, which is very achievable. I mean, some people are watching this going, oh, I could never achieve that. But you guys have no idea what you can achieve. You put aside what you know and allow for information that you don't know, because that's where the profit is. So when I say things like $500,000 to $1 million, these are very, very achievable numbers. Once you get to that point, you can then take out £30,000 to fund a lifestyle. Let's say you've worked out that you need $30,000 to fund your lifestyle for over 12 months. Rent, food, going out, whatever the case is, holidays, blah, blah, blah. If you've got $500,000 to $1 million in an account, and you're taking out £30,000 to fund that lifestyle, you'll make that back the following year in a good period of investment. So for me personally, it took me 4 years to get to that point. I worked hard. I was working 3 jobs. I was saving as much as I could, constantly recycling my profits back into the system. And then when I was confident that I finally knew what I was doing and that I've done well enough to reward myself, I then gradually, I didn't just stop, I gradually weaned off my hours. So instead of working full-time, I went part-time. I got contract work. I was taking jobs that I wanted. Yeah. And then through that, when I eventually gave up all the photography and teaching English, I then went into mentoring and training people. So, I had another income, if you like, coming in where I was training people because how have you done this? Show us. My time's valuable. Our time, our knowledge is valuable. We've got things to offer. So that comes at a premium. So, we've transitioned away and we now ultimately have this Sublime trading ecosystem where we're doing what we want to do.
Wicked. And yourself, Kola?
Yeah, I mean, when you actually become free, have that financial independence, it's a great feeling. But even when you're on that journey, knowing that you're making consistent money, it's still quite nerve-wracking letting that job go, letting that security go. I've heard it from a lot of people, no matter how much they're making through their investments. But it is, once you actually let go, it's a nice feeling. But then the question is, what do you spend your time doing? And so this is why we've created Sublime Trading. We want more people to feel what we're feeling and have that financial freedom down the line as well.
Yeah, and just to add to that, we're blessed with some of the amazing people we have in our community. We're expanding our own network. And through that network, we wouldn't connect with you if it wasn't for Sublime Trading, right? We wouldn't have met Kamal, who's my personal trainer, who introduced me to you. So, we are creating our own network through what we're doing. And this is the beauty of what we're doing now.
Lovely stuff. So just before we close, what is your outlook on the market for 2022? And what are you looking to invest in? What asset classes or any stocks that you think are interesting for 2022?
So with Sublime Trading, we never predict the next move in the market. We are trend followers. So when it's like what Zahir said earlier, we follow the money. So if an asset is moving, then we jump on board. But highly likely there's going to be plenty of opportunities next year, especially in stocks. So we're just going to keep doing what we're doing, and as soon as opportunities present themselves, but we don't predict what's going to happen next.
Yeah. Just to add to that, it's a really, really good point. People want predictions. You see that all the time in Facebook groups and conversations and Telegram groups. They want to know what's next. The answer is to let the market tell you where to invest your money. And this again all goes back to financial literacy. I read a very interesting fact, or I heard a very interesting fact on a podcast I heard recently where Andrew Craig was being interviewed. Andrew Craig wrote an amazing book called How to Own the World. Very, very good book on just understanding the market, the financial space in a lot more detail for us as everyday people. I wish I actually wrote that book. It's a great read. And on this podcast, he said that only 8% of the UK invest. That's a shockingly low statistic, but we know that financial illiteracy generally is not great around the world. And there's a reason for that, because the more financially literate you become, the more powerful you become. The more powerful you become, the richer you become. The richer you become, the more money you have to impact the world. And as individuals, everyday people, if we were all investing, if we all had more money, you can imagine what kind of world we'd live in. We would live in a very, very different world. Yeah. So the idea that the population as a whole is not financially literate is kind of planned in many ways, because it keeps us working, it keeps us serving, it keeps us paying taxes. So financial literacy is not about predicting. Financial literacy is about understanding the market, understanding how the market moves, being able to understand where the money is. This all comes back to what Kola touched upon, which is following charts. When you follow charts, you can see where the money is. So if you're hooked on Tesla and Tesla's going down or it's going sideways, there's no money there. But if you're looking at a stock like HubSpot, it's a stock that everyone knows. It's a company that people know, but people aren't really familiar with the stock. But HubSpot is doing quite well. So why would you be in Tesla if HubSpot is telling you the chart is doing well? So the answer to that question is, what's going to happen next year? We have no idea. We've got the technology at Sublime Trading to tell us. We've got scanners, we've got charts, we've got tools, we've got a system in place. Very, very simple. Again, very simple to learn. There's an element of sophistication to it, but it's very, very simple to learn. You get these processes in place, you don't need predictions. The market will tell you. And when the market tells you, it takes away all the guesswork.
Really, thank you very much. So just before we close, you mentioned one book there. Could you both give me 3 of your most impactful books that you've read in your life?
Impactful, but I'll say Rich Dad Poor Dad. It's a good starting foundation, but I wouldn't say it's what you need to get where you're going. But it's definitely a starting foundation where it's going to help you. Well, what it did for me was it gave me a burst of energy to learn about how to become financially free and just understand money in general.
As long as he stays in his lane, yeah? Robert Kiyosaki. Because he talks about market crashes all the time and he's wrong. So this is the thing. You've got to be really careful about these gurus, okay? Some of them have got really good books. They're good to, as Kola said, lay a foundation.
Yeah,
but yeah, exactly. Understand, he's not an investor. He's not a stock market expert, right? He's just someone who's got a big following, who wrote a book and he's got a reputation of it. And he's actually from the property space, right?
Yeah.
Exactly. So this goes back to what we're saying. Be really careful about who you follow, because a lot of these guys have no idea what they're talking about. Yeah. But the book's good.
As long as the book does its job in terms of making you follow your passion, then that's...
Exactly, it's done its trick.
Yeah, no, I agree. I like that book. I've read that book as well. So yeah, that was a good one. And I think it's a good one to take in earlier on in life.
Yeah,
if you take it in when you're like, I don't know, even 12 to 15 and 16.
Absolutely.
It will set you up nicely.
A great mindset read.
Then you move on to other books.
Yeah. What else?
Another book I would definitely say, this relates to investing as well, but also mindset, is Trading in the Zone by a guy called Mark Douglas.
I knew that was going to be second.
Yeah, so
I knew it.
because investing, like most things, it's 20% what you're doing and 80% mental.
Yeah, definitely.
So you could be an athlete, you could be a business owner. It's
mental.
It's all about mindset.
Yeah.
And so with this book, it teaches you how to not think about investing as putting your money in and trying to get money. It's making you think about it in odds and probabilities. So you're detaching yourself from the money element. That way you're able to think about investing objectively rather than thinking, oh, I'm putting my whole month's wage onto this investment, which is the wrong thing to do. So the must read, if you're in investing, then definitely read Trading in the Zone. Yeah.
By Andrew.
No, by Mark Douglas.
Mark Douglas.
Yeah. Andrew Craig wrote How to Own the World.
Okay, Andrew Craig, How to Own the World. And finally,
No, that's you got one more.
Free
Yeah,
each.
free each.
unless they're the same.
Because it's interesting because my first two books are different to yours. But go on, yeah.
I mean, does it have to be investment related or just
Just impact, the top 3 that had an impact on your life. Not investment related, it could be, but it just has to have a significant impact. I read this book and I thought, oh, I've changed my direction.
I actually listened to the audio. I'm trying to remember it.
The turtle one.
I'll say probably Think and Grow Rich. So,
Oh, man.
Yes, another one.
Interesting.
it's similar to Rich Dad Poor Dad, but goes to a whole new level. He interviewed millionaires and just worked out what.
Is that Napoleon Hill?
Yeah.
I keep on saying Napoleon Dynamite. Napoleon Hill. Yeah.
No, I was hoping to get some new books out of you guys, but yeah.
I mean, the thing is, right, they all say that majority of the same thing. No, these are the guys who wrote it from the beginning.
Yeah.
So most of the time, most of the people after that have literally just read those words and created books in their own words. Yeah. So as long as they all have the right message, that's the main important thing.
Yeah, I think when you've read one or two, you've read them all because they kind of all got that same message, right? But ultimately, it's about implementation. Have the right mindset and then learn to implement it. Because, I mean, the secret's about just thinking positive, but just being positive is not going to get you anywhere. You've got to act, right? Yeah. So these books are all great. I've read a lot of these books. Like, I think there was a book called The 1 Minute Millionaire. There was another book. The monk that gave up his Ferrari and all. I mean, I've read a load of these books, but the books that really set me on the path to investing. So the books that Kola mentioned, read them at the beginning of your journey. As you said, kids 12 to 15, they should be reading this. It should be part of the curriculum. Why are we still reading Julius Caesar? When, I mean, it's fine, read Julius Caesar, it's a great read, but, next term, read, Think and Grow Rich. It should be part of the curriculum for kids, right? You can do both. Why aren't they doing both? So I would say do that. That's your foundation. But when it gets into investing, the books that you want to read, the books that really changed things for me was Way of the Turtle by Curtis Faith. This is a story, a true story that happened in America. It's an experiment. 2 multimillionaire traders. One was Richard Dennis. The other one was William Eckhart. They were best mates. So he's William Eckhart. I'm Richard Dennis. I believe anyone can be a trader. You can teach them the rules and anyone can do it. He's a bit more of a snob, right? He's like, nah, you're born a trader. It's inside you. Yeah. So we put an advert in the Wall Street Journal inviting people to this experiment, novices. We narrowed down to a group of people. I think there's 2 experiments, 2 groups year by year, and 10 in each group, I think. I can't remember exactly the numbers. They taught Richard Dennis's rules. Over the next 4 years, they turned over almost $200 million. Now, not everyone in the experiment was successful. Some people were dropped because it all goes back to mindset and following rules. But it showed me that if you're given a system that works and if you consistently follow it, you'll make money. And so that's what we do here at Sublime Trading. We give people a system that works, and it's the ones that consistently follow it, that have the resilience to follow it, that will make money. So that's the first book, I would say, Way of the Turtle by Curtis Faith. If you've seen, I don't know if you guys will have, but I'm a little bit older than you guys, but Trading Places, Eddie Murphy, 1982.
So.
Have you watched it? You've watched it. Yeah. If you haven't, you guys have to watch this. It's when Eddie Murphy was funny, right? Back in the day, he made some brilliant movies. Yeah. So Trading Places, same year as that experiment that happened, 1982. Very similar stories. So that's the first one. Trading in the Zone. Way of the Turtle by Curtis Faith. Next book is How I Made $2 Million in the Stock Market by Nicholas Darvis. Yeah. And he was a dancer, right? How he made trend following as well. How he made money in the market. $2 million. Great read. And the other one is Reminiscences of a Stock Operator by Edwin Lefebvre, I think his name is. And it's loosely based on a gentleman called Jesse Livermore. And Jesse Livermore made a lot of money. We're talking about hundreds of millions in today's, maybe even billions in today's day. Following a repeatable system. So those are the 3 books that I would recommend.
Perfect, thank you. And also, two of those are actually on my list. How I Made 2 Million in the Stock Market, that's on my Audible already, so I'll
Good.
pick that up.
Great.
And I think the Reminiscence of the Stock Market, I've already
Stock
got it.
Operator.
So, yeah, I think it's downloaded.
Good,
I'm
good,
gonna
good.
check it out.
Yeah,
Make
good.
sure you guys check it out as well. So I have 6 good books there. We've all got to pick up and take a look at some point.
Yeah, absolutely.
So just before we close, just let everybody know your website, where they can find you, and how they get involved with Sublime Trading.
Yeah, so sublimetrading.io is our website. And a great place to start is a scorecard that we have created. There'll be a link on the website to the scorecard. You can also email us at hello@services.io if you can't find a scorecard. I think, Ellie, you might link it in the description. And the scorecard is a great place to start because, first of all, it will give you a report on where you are right now on your journey towards wealth creation and towards retirement. Remember, you've got to prepare for retirement. And once you've completed that scorecard, you will then get a wonderful free gift, which is called the Launchpad. Anything to add?
Yeah, also subscribe to our newsletter.
Yeah, good point. It's in the Launchpad anyway, right? So when you download the Launchpad, the weekly newsletter, that goes back to one of the questions you asked, which is, what stocks should we be looking at? That newsletter, is picked out by our scanning service, and you'll literally get access to the best stocks.
Perfect. Thank you very much. So there you have it, guys. We'll also be partnering with Sublime Trading, so you will see their courses on Knowledge Finder when we launch the rest of our courses. We're pulling together this great information from all of our guests, so make sure you check it out. You can just log on to Knowledge Finder and find them all there in one place. So if you haven't already, click the like button, smash subscribe, and that is it for this week's episode. Take care.